All right, so here we are with chapter 10, payroll setup. Now there's actually a lot of stuff in here. We got to think about our payroll accounts, our payroll items, such, and we also are going to be using an interview to help us set up everything. Now, as far as doing a manual setup, it's almost impossible to do a manual setup because if there's so much stuff that's going on that you have to complete. It's better to just go ahead and use the payroll setup interview, and just so that you don't forget anything. Now, of course, if you are an expert at QuickBooks, you'd be able to know how to manually put in your payroll things. But again, if you just want to make it quick and easy, well, in this case, it's not a very quick interview either. If you do want to go take a shorter route, unfortunately, it's a lot more in-depth and detailed than what is to the eye. Okay, so the best thing that you can do is just go ahead and do the payroll setup interview. Okay.
Mm-hmm.
So of course on the page 292. Okay, we have a list of things that you need to do in order to go through your whole entire payroll setup. So as you can see, chapter 10, there's 10 steps. All right. So of course, the first one is, of course, you need to be collecting all your employees' information, all their W-4 forms before even getting started. Now, for me, I think there should also be another step 0, right? For this.
Mm-hmm.
So just like in chapter 12, when you have that 12-step thing to set up your company file, same thing here. For payroll setup checklist, okay? First off, you need to make a decision. You need to make a decision. Are you going to have employees or are you not? And what are you going to do? How are you going to pay them? How often do you plan to pay them? Or are you going to have them be salary based or are you going to have them wage based? You need to be able to have all of these things answered before using the payroll setup, because you never want to be sitting there in the middle of the interview deciding whether you are going to pay them as a salary or as a wage based. Okay. So you can have those, set, of course, because those are the only options that you really have. It's either you pay them salary or you pay them wage, right? You can set them up as whatever you'd like, but, to avoid having to make those executive decisions or, having to have those payroll items set up and then never use them, this is a great way to eliminate having to stay on one page for too long by having an idea, especially when it comes to compensation, all right?
Mm-hmm.
And we're going to talk about that. That's one of the payroll setup items that you have to do. So, again, if we go through each one, obviously the first one is to get the employees' information. Then we have to activate our payroll functions, or just in this case, we'll talk about payroll services at the end of this, because that's definitely going to be a leeway to chapter 11. But that's definitely going to be something that you want to consider as well, is like if you do plan on using QuickBooks to go ahead and process your payroll services, you may do so. And then enter it in QuickBooks manually, so then when you do accounting, it shows up what you've done. But in this case, we'll talk about manual payroll actually tomorrow as well. Okay, since we're doing the payroll process tomorrow. Other than that, then step number 3 is to set up the payroll accounts and set up the items. So again, we'll take a look at that in a few seconds, and then enable your QuickBooks payroll processing and to enter in manual or use signing up a payroll service. Okay, so again, that is going to be definitely one of those things there. And then step number 5 says to use the payroll setup interview. So in this case, it tells you that if you want to do manual payroll, or if you try to set this up manually, you can, but you shouldn't. You have to be an expert at it, QuickBooks to know exactly what you're entering in. So that's why they say, the best thing to do is go ahead and just use the interview. It's a quick, easy thing, and it does everything for you. It sets up everything for you. And then it says step number 6 is to add any additional payroll items directly into the payroll item list. Okay, so again, in order for you to successfully go through this whole entire 10-step thing without having pauses or having make it an easy flow, decide 3 things. Are you going to have employees? And if you are, the second thing is, how are you going to compensate them? Are you going to pay them wage, salary, overtime, sick pay, vacation pay? You have to consider all of that. Are you going to offer a 401k plan? So you have to. Then the third step is to what benefits or what deductions can you offer to your employee? Do you have a retirement plan? Are you going to pay for health insurance? You need to decide all of that before doing this. Okay? Mm-hmm. Especially with those things, because we also have to consider that when we are creating our payroll system, right? We need to know how we're going to pay them, what benefits they have. Am I going to have to pay into their 401k plan? Am I offering them medical insurance, health insurance, vision, dental, and I forgot what the other one is. Vision, dental, insurance. All right, life insurance. Am I going to offer them life insurance?
Yes.
So those are all factors that you have to consider, because when you create your payroll items, that is where you're going to be entering in all your items. Needless to say, if you are typically a small company and you're building up for your first time, unfortunately, those kind of options are not going to be something that you want to consider, because you're starting up your company. You never want to give the benefit of the doubt that you're going to, glorify your employees, especially when you're starting out business for the first time, because you don't know how your projections are going to go. You don't know how well your business is going to go. The most important thing is that if you're going to have employees, you need to make sure that the first thing that you can do is afford to even pay your employees. Okay? You never want to be stuck with that part where an employee worked for you for 40 hours and all of a sudden you're like, I have too many expenses to pay this month. I can't pay you this month. They're going to be mad at you and they're going to leave you. Okay? Especially when you come into that circumstances if it's happened multiple times. So it's always rule of thumb. When you are a small business, the benefits and the deductions will have to happen later when you are a well-established business and you can afford to supply those benefits or deductions to your employees. And of course, with this payroll setup, if you don't have those benefits and deductions, you can always add them later. You're not required to add them now, but you do. If you do add them later, you're just gonna have to add them in as a new payroll item and let QuickBooks know that that's something that you're adding on to the services or payroll. So that's just a little thing there. So again, I'll talk about the services at the end of this thing right here. But let's go ahead and dive right in. So of course, the book has already laid out everything that we need to know. So let's go ahead and dive right into first setting up the payroll accounts. So of course, when we are setting up payroll, there are a few things that you need to know. Okay? Mm-hmm. We have a duty is if we have employees that we're going to be owing the government money, because again, we have the idea that if we have employees, we have to pay for their Medicare and their Social Security, also known as FICA, right? The Federal Insurance Contribution Act, right? We have to pay into their FICA. It is a federal something that we have to do because it's required by the law. And we also have to pay for the state as well. Whatever requirements that the state holds, you have to pay as well. So therefore, when I go to my chart of accounts, I need to ensure that when I am having payroll, that I need to ensure that I set up these accounts before actually going into the payroll and before doing the payroll setup interview. Okay, so if I go down here, I'm gonna go check out my liabilities and see if I have anything that has to do with payroll. So as you can see right here, I have payroll liabilities, and it's broken down to my company payroll taxes and my employee payroll taxes, and of course other payroll liabilities. So again, when we're talking about FICA, right? Our employees pay a portion to the government, and it is our duty as the employer to also match the Federal Insurance Contribution Act, the FICA. We have to match it 100% because that's our duty as that we must do. We must protect our employees by providing for them as well. Okay. Other things that you can have too is in case you do want to protect yourself as a company as well, you can have workers' compensation, right? That's so then in case the employee, gets hurt on the job, instead of having them turn around and sue us, we already set aside a settlement for them already. We it doesn't come out of their paycheck. It's what comes out of our duties to protect our company, right? The whole purpose of a workers' compensation is so that in case they do go or turn around and decides to file a lawsuit to us, we have the money to go ahead and pay for the medical care and and pay for whatever they need. So in most cases, for workers' compensation, which you are aware of, if you get injured on the job, will pay your medical bills. They will also pay for a training course for you to go ahead and get yourself retrained to go back into the work field, whether it's you work for that company again or if not. But most cases, they retrain you into something else so then you don't actually come back to the company. As sad as it sounds, they've already done their duties because you got hurt in the job. They just don't want you to have to sue them for that reason. So they have the money to be backed up for you. All right? And usually it's based off of what you've made, not what not a random dollar bill that just goes into workers' comp. Okay, so that's where other payroll liabilities will go to because you owe the workers' compensation, whatever agency that you work with that allows you to do that protection plan, you're going to have to owe them money. So whatever agency that you have to take care of. So I think Genix is one of them. Have you heard of Genix?
No, I haven't.
Genix is one of the popular worker compensation agencies that protect the companies, but it also allows them to set up these programs. All right, so that's one of those examples there. Of course, any other payroll liabilities would be if you pay into a 401k plan, you need to have an agency that you pay to in order to build your 401k plan.
Right.
All right. And yeah, so we do have those right here, my payroll liability. So people that I owe. So obviously I'm going to owe the government, right? The federal agency. And I'm also going to owe the state agency. So definitely something that we're all going to be putting the money in there for. And of course, as our duty as the employer is that we have to pay them. So we have payroll expenses. So here, this is where when you this is when you actually pay your employees, right? We pay them as an expense because it is an expense to the company, right? We have to. It's our duty to pay them every week, every 2 weeks, I don't know, twice a month, whatever way that you set it up for is what you're going to. You need to create an expense account for that. So here I have payroll expenses. So here they use gross wages. Okay, There's other forms and ways that you can pay your employees, right? It could be salaries and wages expense. It could be salaries expense, and then you have a wages expense. However you want to title your accounts. In this case, they use gross wages. Okay, that's cool. Okay. We also have a payroll tax expense. So when we do make our payments to the government, this is what we're going to entail it as. Or in this case, we're dedicating our section of the money, and what we're going to do is it's actually going to be the credit to it is going to be the liability, right? We're not paying them now, we're paying them later. But I need to make sure that I have enough money to go ahead and pay for those expenses. All right, so then it gets broken down to employee benefits. So anything that's on employee benefits. So if they pay into their health insurance, right? Um, anything like that, it's going to be considered an expense. Okay.
Okay.
And here we have it right here. We do have our payroll accounts. Okay. So that's that right there. Okay, so we do have our account set up. Now the next thing that we got to take a look at is setting up our payroll items. Now, if you don't have them already preset, that is okay, because as we go through the interview, we're actually going to be setting up our payroll items. So if I go to list and I go to payroll items list, I have a few that's already preset already, such as federal unemployment, state unemployment, right? Or in this case, I don't have state unemployment just yet. I have to create that, but I do have the main basic ones like Medicare and Social Security, right? Your FICA, your Federal Insurance Contribution Act is already dedicated right here, and you have what the employee puts into their FICA as well as their federal income tax withholdings. And then we also have our duty as a company to pay for the Medicare, Social Security, but we don't pay for their federal income tax withholdings. Our duty is to pay for the unemployment. So we have these ones. These are basic standard ones that you should have, because again, you are required by law that you have these federal taxes already set up. Okay.
Okay.
So again, any additional other things when we dive into the payroll interview setup, that is where we're going to talk about adding additional payroll items, such as a salaries item, right? A sick PTO item, a vacation PTO item, overtime item, whatever it is, right? That's where we're going to be creating our additional items there. But for now, let's go ahead and let's dive right into the interview. Okay, so here we are. Let's go ahead and get started with the interview. We talked about payroll items, so let's go ahead and get started with the payroll setup interview. So there are two ways that you can do it in case you don't have it already. You're supposed to be able to do it on the home page, but in this case, they do tell you in order to set up your payroll, you are going to go up to your employees on the menu bar, and you are going to go ahead and do the payroll setup interview here. Payroll setup right here. Payroll setup. All right.
Okay. Got it.
It's supposed to be on the home page. It's usually right underneath the employee center, but in this case, they don't have it anymore. But so the only way that you can do it is through the employees menu bar. Yeah, it used to be down here. Like you'll be able to set up your
I was
payroll.
just getting ready to ask, well, why don't you just hit turn on payroll?
Oh, okay. No, okay. That is not it. That is not it.
That is not it. Okay.
This when you click on turn on payroll, that's the payroll services.
That has everything that you said. Oh, that's the services. I thought
Yeah.
Okay.
They used to have it, but now they don't. So, so in this case, employees, it's going to be on the employees menu bar, and you're going to click that payroll setup, and that's the only way that you can do it. Okay, only way. So I'm going to go ahead and initiate it. And now what's going to happen is now it's going to start creating up the profile and whatnot. Okay. So notice this. So now we are at the introduction to the payroll setup window. Okay, as you can see, it's broken down into 4 components. The first one is going to be company setup. So this is where all your compensations, all your benefits, and all your deductions are going to be set up. All right.
Okay.
And then the next section is going to be your employees, setting up your employees. Okay, that's where you're gonna enter in an employee. You're gonna have their W-4 form readily available, and depending on which W-4 form that they give you, as you can see, I am using the 2019 version of QuickBooks. So unfortunately, mine is using the 2019 W-4 form. Now, of course, if I upgrade to the 2020 or the 2021, it's going to give me a completely separate one because the new W-4 form for 2020 is drastically different.
Oh,
Okay.
really?
Yes, it's very, very different. So there's no more withholdings. And it's all about understanding like what's your total overall income, because nowadays, you know, with society, they tell you you should only have one primary job, or if you do have a secondary job, what happens is you have to file 2 separate W-4 forms or W-4 forms to each employer. In this case, they eliminate having to do 2 separate W-4 forms, right? You'll still get 2 separate W-2 forms from your employer, but the concept behind this is that if you are doing a second job, you're going to write it all in that one form. So I'm going to take a quick second to show you real quick what that W-4 form looks like now. Since now that you are going to be finding a job, you are actually going to be required to fill out the new 2021 class, the new 2021 W-4 form. So I'm going to go ahead and take a quick second so we can go ahead and look at this. So here 2021, and we're going to pull up the W-4 form for the 2021. So here it is, W-4 form 2021. So there it is. Here it is. It's the same. The top part is the same exact thing. We're filling in our name, our address, our social security number, whatever it is, right? And here's the second. This part is different. So if you remember when we filled out the previous ones, right, the 2019 and earlier, right? We don't have this section right here. You just write what you're claiming your status as. You either claim that you're either married, single, or if you are, those are the only choices that you can choose: single or married, right? But this time it's split up to a little different. You either file as single or married filing separately, or you do married filing jointly, or you can actually claim head of household right here. You know, if you remember the 2019 or prior, you can use head of household as one of the withholdings that you can claim. In this case, they don't give you that option. Okay?
Gotcha.
And then here's part 2 where I was talking about. This is all income, including primary and secondary. Of course, with 2020 nowadays, right? We can have multiple jobs. For example, like I can have my primary day job 8 to 5, but what I can do now is I can also do Uber as a secondary job, right? Or I can do Postmates. I can do something that I could do one of those delivery services. Nowadays, it's very popular. Okay, before this wasn't very popular, and that's why it never was something that you had to do. You had to file separately. You 2 separate W-4 forms. Now they make you do it all in one, because now the vast majority of people being able to have a day job and do Uber, Lyft, Postmates, Grubhub, whatever it is, right? Instacart, they can do a second job that doesn't require them to, do so much. So with that being said, this part here is going to be considering every single extra income that you earn, that you have from your primary, secondary, and even if you have a third job, this is where you have to consider everything. And it also takes into fact that if you are married, it also takes in fact of your spouse's income. Where the W-4 form from the previous one, they didn't even care if you had a spouse that made income. They didn't require you to ask it. So if you don't have a secondary job, but you have a spouse that's working, you're required to report their wages as and earnings as well. So they want to know how much is your total gross household income. Okay? No matter, even if you, okay, so, and this, it only applies if you are married, legally married. Okay? Even if you're not filing jointly, you need to report it. All right? And then here's the third part right here where it allows you to claim your dependents, right? When we claim our dependents, it used to be one withholding per dependent that we calculate, or and it's calculated based on how much each withholding is. In this case, they say no. You tell me how many dependents you're claiming, and we're going to assume that it's going to cost, for every dependent, it's going to cost you $2,000 per dependent every year, which is ridiculous because that's not true. A dependent does not cost $2,000 a year. They cost way more than that. But that's just the federal way of saying you should spend a total of $2,000 extra for every dependent that you have. So they want you to calculate based on how much you have there. And of course, any other dependents that's not your children is going to be $500 per thing. All right, after you've done that, then this is where you're going to be claiming other income that's not from your primary job. So this is where you're going to be enlisting anything that's from your secondary job, your third job, whatever it is, right? And any deductions that are not from or whatever, any extra additional deductions that you want to take, so such as your home, right? I believe if you own a home, you can take a deduction off your income. All right. So again, and they made an easier way to fill this out as well by using the IRS. I believe it says it somewhere right here. If you go onto the irs.gov, they do have a tax estimator, and it helps you fill this form out for you. Okay, so that's the new W-4 form as of 2021. So make sure you know the differences, because when I'm filling this payroll system out, and what you're going to be required to know is you're going to be required to know that the old version of the book, which is the filing the W-4 form for 2018 and prior. Okay. So you will have the little option that says how many withholdings have you claimed. All right. All right. So let's go ahead and get started with the payroll setup. So again, we went through all of that. So there you go. And we talked about the 4 different types of categories. So I already went over the first 2. The next one is because we are required to pay taxes, we need to set up our taxes that we have to pay to the state, to the federal, to whoever. And then lastly, the last section is going to be year-to-date payroll information. So if you are using payroll in the middle of your year or whatever it is, usually it's by fiscal year, okay, then that's going to determine whatever extra information you need to put in. So your year-to-date federal income tax withholdings, your year-to-date Social Security that you've already paid for. You're going to have to fill all that in, okay?
Okay.
So let's go ahead and get started with our interview. So let's go ahead and click that continue button, and I click that continue button. There you go. There's the first thing that we got here. So, yeah, for some reason, I think I just have to click harder, I guess. So, first thing that we're going to be looking at is going to be company setup, which is going to talk about first things first is how are you going to pay your employees? That's the first thing you're going to say. Are you going to have an hourly wage? Yes, we are. So in this case, in this exact example, we will have one person who is a salary based, and then we'll have one person who is an hourly regular. Okay. So of course, usually your salary based people are like the higher ups, the management particular part, while your hourly wages are going to be usually you're like someone who runs the front desk of the office, right? So that kind of thing here. So we are gonna have salary, we are gonna have an hourly wages, and then they ask you, do you offer bonuses and or other payments or one-time commission? Yes, I'm gonna allow that to happen because again, with Mr. Mike Mazowski, right? We're gonna say we'll give you a commission based on how many sales that you've earned. Straightforward, right? Other factors that's considered as compensation is that are you going to have commission, like a straight commission? Are you going to have tips? So remember some, especially in the state of Nevada, if not all casinos, they do actually include tip as part of your income.
Lynn, you're breaking up. I can't hear you at all.
Oh, can you hear me now?
Yes.
Okay. Oh, okay. That was kind of weird. All right. So again, I'm going to repeat that again. In the state of Nevada, right? Most cases, if not all the casinos, right? Most of them are based. They receive tips, so they actually include tip as part of their earnable income.
Right.
So that could be a factor. So if you are in the state of Nevada, then go ahead and put in tips that's going to be as part of their income, and usually it's like a rough estimate, right? So then other things that you can do too is if you want to have a place, I think that says piecework. I don't know what that is, but for any reason that you don't know what that is, you always have a little explain button right here. Yes, go ahead.
Okay, I was gonna tell you what it was. I wasn't even looking at that. That's where you get paid extra compensation. Like when I worked at an inner tube factory years ago, if you did 500, that was all you're supposed to make the day, but you ended up getting 700 or 800. You got paid extra for that.
Oh, okay. I got it. So like any side projects that you do that's within the company. So let's say they say, hey, if you're gonna party plan with me, I'll pay you this for this project itself. So piecework. Okay, cool. Right, but they do have a little explain button. So again, that's why I say this very, very like in the beginning. You should establish and know everything before you go ahead and do this, because you don't want to sit here and be like, do I want a piecework? Should I have a piecework? What is a piecework? You don't want to spend too long on this because again, this interview, it's broken up into 4 pieces. But guess what? Each one is, you've read the book. It is very, very long to go through.
Right.
Okay, so again, I don't know. I'm not going to have the piecework, so I'm going to make sure that my options are going to be salary, hourly, and then I'm going to also include any bonuses and commission and a one-time commission. So then I'm going to go ahead and click finish. Okay, so now this is where I was talking about. So now that I have these listed items here, this is where I'm actually going to start creating each payroll item. So then when I start paying my employees, I pay them based on the item that they belong to. If this person is based on a salary wages, then I select that they are salary. If it's a wage rate, then I select as an hourly wage. Okay? So in this case, we looked at the items here. We have a total of 5 items here. And let's go ahead and take a look at the book because the book is actually being very specific. They want us to take a look at what we should have and then delete things that we shouldn't have. So the first
Right.
one is, it says here that for double time hourly, we're going to delete that. We're not going to even offer it. Okay, so I'm going to go ahead and click on my double time right here. And at the very bottom, you could choose to either, you can add a new one. So again, if you have, like, for example, you have additional pay or something like that, go ahead and place it in there. Right? If there's something that you don't see on here, like let's say you do want to create an item, you can create it right there. You can edit the item or you can simply delete it. So in this case, they want me to delete it. And they ask you, are you sure you want to delete it? We say yes. So now I'm down to 4. Okay, so let's see what happens next. So for my hourly, they want me to rename it to hourly regular and make it a payroll expense item. So by going back to my little window here, I'm going to go ahead and click hourly and I'm going to click that edit button. Okay, so that's going to pop up a second window here and it's going to allow me to edit the information. So in this case, I want it to say hourly regular. So I'm going to type, I already have hourly in there. Now I got to type in regular because that's what they want me to place it as. All right. It is an active item because I am going to be paying one employee based on an hourly rate. And now they want you to set up which account are you going to associate this payroll expense for. Okay, so in this case, we already have the account, right? We've already took a look at it. It's going to be payroll expense gross wages. So I have to go ahead and look that up right here. Payroll expenses gross wages. All right, so they want me to go ahead and place that particular item and either place it into this particular account. So I'm going to go ahead and click finish, okay? So I am done with that one. So then the next one they say is, in your book says that it for overtime times 1.5, we're deleting that item. Salary, we are going to, we're going to do salary regular and also edit the information to also be placed on payroll expense gross wages. Yeah, so our overtime 1.5, delete. Yes. All right. Then we're going to fix salary. Okay, edit button. And they want it to say salary regular. Salary regular. Okay, it is active and my account is going to be gross payroll expense gross wages. All right, I'm going to click that finish button. And then now, last but not least, I'm going to go ahead and edit this one. So, let me see. Okay, so here, bonus is the same. Bonus is the same. You're not going to change it. However, you are going to change the account that you're going to link it to. So it's still going to be the salary, the expense gross wages. Okay, and finish. So now I have 3 things I offer: an hourly regular, a salary regular, and then a bonus. Okay, so that's just setting up the compensation portion. All right, so now I'm going to go ahead and click continue. So next is going to say, well, now you're going to be setting up medical insurance or health insurance in this case. And I'm going to go ahead and click continue. So here's the question here. It's going to pop up a window and it's going to ask you, well, what do you offer your employees that you are going to pay for as well, pitch in as well, or offer, right? So you have a couple choices. You either do health insurance, dental insurance, vision insurance. You could do group term life. Okay, so life insurance. You can do, I'm just looking through the list. Other insurances. So again, you could do medical care. I don't know what FSA stands for, but of course, you can take a look at that and be
Oh,
able
it's
to explain.
flexible spending account.
Oh, okay, cool. Okay, so of course, most cases, a lot of companies they offer just the very bottom line basic insurances. They would provide a health insurance, dental and vision is optional, right? You don't need to have it unless the employee wants it, but you can offer it. And then lastly, a life insurance. Life insurance, okay, it can be offered. It's also rare that a company would offer it to you, because if they're already going to pay in what do you call it, a workers' compensation. If you pass away in the job, right? You know, whether that's could be considered one of those law things where the family can come after the company and sue you for the death of a family member because of they died on the job. So life insurance can protect not only the employee but also the employer as well. Okay, for my standpoint, I haven't seen many companies that offer life insurance. It's only for like major companies such as like construction companies that offer this kind of
Federal government.
federal government offers it as well. Yes,
Hospitals.
hospitals. Yes, absolutely, hospitals. 100%. Yes. Okay, so in my case, I'm only going to be offering just only health insurance. No dental, no vision. All right. Apparently, in this company, I can't afford it. Let's just assume that. And I'm going to go ahead and click next. So then the next question is, it's going to ask you, right? Tell us tell us about your health insurance. So again, the question is, how is your health insurance paid? Is it going to be the company is going to pay for it 100%? The company and the employee going to contribute to the health insurance, or is the employee 100% responsible? In most cases, if you're a company and you're offering it, you're most likely going to pay a portion of it. If you're a wealthy company, then you're more likely to pay 100% of the entire cost. Okay, but most cases with that kind of deal, if the company does pay for it 100%, then there's a deduction that comes to with it, right? So that means the insurance company the company pays for the insurance. However, for anything extra such as an office visit fee, a deduction, anything like that, a copay, you are required to pay for it. So that's a downside to that. But in this case, I'm gonna say no. I'm gonna say that both parties are gonna be responsible. So both the employee is gonna pay a portion, and I'm gonna pay a portion of it. All right. So once I click that, now it popped up another question. So is this employee portion deductible before or after taxes? Okay. So in this case, most often cases, it's always after. It's never before. It's never before. Especially when it comes to health insurance, it's always after the federal taxes have been taken out. It's usually after. Okay. If you'd like to have it before, you can, but then the government might come after you for that, because essentially, if an employee is paying like $200 for their health insurance, that's also taking away money from the government. So usually they make it after, always. Okay. Then you're going to go ahead and click that next button. So now it's going to be setting up how this, who you're going to be paying the insurance vendor to. In this case, we're paying to Miss Merrill Lynch. M-E-R-R. There you go, Merrill Lynch. Are you still there?
Yes, I'm still here.
Okay, sorry, you cut out. I didn't know if I cut out or anything. So
No.
so okay. So here we have to pick a company. Is it Merrill Lynch that we're looking at? I believe so.
Oh, yeah. I'm gonna stay in mine. I'm getting over there.
let's see what this says. For health insurance, I think Merrill Lynch is for the 401k plan. Let's see. Benefits. For the health care plan, the account's going to be payroll expense, employee benefit, liability. Yes, Merrill Lynch is the person that we're paying the insurance company to. Okay, so here we go, Merrill Lynch, and her the account number is going to be 123 dash 123.
I can't even find the place where it said it was Merrill Lynch. Are you kidding me?
Oh, okay, never mind. That's going to be something else. Okay, so it's going to be on here. Let me see. In your book, so here we set up our payroll item. So now we're setting up our, the Medicare, right? We're going to call it health insurance instead of whatever, or we're gonna call it medical insurance. So in this case,
Okay.
we are on page
297.
Yes. Do you see the Merrill Lynch now? Right here. Medical insurance active, and here we go. Expense, insurance expense. Do not.
That's why I kind of got lost there. I'm like, where are you getting Merrill Lynch? Oh, that's way over in the 401k.
Oh, it's okay. You're right. Then where am I? Okay, so let me see. Payroll setup. We're at company setup. We're supposed to do benefits. Right now we're doing health insurance. Delete. Okay, I don't know why I'm being asked these questions when I'm supposed to click done. So I'm going to go ahead and click finish. So, okay, so once I'm here, now I'm at this window here. That's so weird. It's supposed to be, okay. So here, I'm supposed to delete my company one. Okay, it says right here you go to the company health insurance, and we're going to delete that one.
Okay.
Okay, so I'm going to go ahead and delete that one. And then it's going to ask me yes. And then we're going to go ahead and edit the health. So let's go ahead and edit this one. So instead of saying, so it says here, instead of using the terminology of health insurance, we're going to call this medical insurance. Okay. I don't know why. It doesn't make a difference, but I guess that's what we want to refer it as. We're going to name it as medical insurance. Okay. And of course, it's an active item. And then here it says track expenses by job. Obviously, I'm not going to do that. So now that I'm going to click this, I'm going to click next. Now it's going to be setting up the actual account number and whatnot. So here it says pay person for the insurance. I believe this is blank. We don't put Merrill Lynch in here because that's for the 401k plan. So no account number. And we don't need to do this. So in this case, I don't need to have a regular payment. And I'm going to go ahead and click next. So there you go. Now it's asking me for which liability I'm going to be setting this account as. And this one is going to be payroll liability, let me see. Okay, we're going to change the account to expense. So not a liability, so we got to change this to expense.
Right. I was just getting ready to say, I'm not following you at all, and then I realized we have to change that.
Yes, we have to change it to expense, and it's going to be, it says right here that we are going to change it to expense and put insurance expense. Insurance expense. We got disability, liability, insurance. One more. Up one?
Yeah, it says insurance expense, health insurance expense.
Oh, okay. Okay, thank you. I didn't know what you were referring to. You stopped me right in the middle. So there you go.
I'm sorry.
We do insurance expense, health insurance. Good. All right, and then we can go ahead and click next. So in this case, we don't have a vendor that we are particularly paying. That's what it says in the book because we're just not going to make a payment to them. But however, whatever insurance company you choose to do, go ahead and do it. So again, use standard tax settings. Yes, always use standard tax settings. Next. Oh my gosh. Okay, let's see. I don't know why I have all this extra information because I don't need to. That's it. That's all I'm done for when I'm doing my health insurance. All right. So I'm just going to go ahead and click finish. Okay, so there you go. I set up my health insurance, my Medicare. There's nothing else that I need to do. So once I've finished that and I have my medical insurance already set up, I don't have a preferred vendor just yet. So again, that will be something that you can take a look at later. So I'm going to go ahead and click continue. All right, so now the next question is going to be setting up a retirement benefit plan. All right, that's going to be one of those benefits that you have working at a company. So you can choose between all of these that are offered. Now, from my perspective, most cases, you're only going to have a 401k plan. All right. I've never heard of a 403b plan. I've never heard of a 408k AS plan. Never heard of these kind of plans here. And of course, yeah. Go ahead.
Those are made out of our tax bracket. That's what it is.
Oh, okay. Perfect. And then obviously, this is actually really weird because I've never seen a company offer an IRA before. Most
No, that's
cases,
usually you do it on your own.
exactly. It's usually something that you're supposed to do on your own. Now, of course, you don't use when you do. That's what I'm trying to say. Companies don't offer an IRA. It is something that you're supposed to do on your own. You go to your own bank account, and you're supposed to, if you do a direct deposit with your checking account, usually it will take it directly and go straight to the IRA. But usually IRAs are never offered by companies. It's usually 401k plans. And that's the most popular one and well-known one. But like you said, you've heard a few of these before. You can use the explain button if you don't know what any of these are. But again, like I said, most common ones that companies do actually go for is going to be the 401k plan. And in this case, if you offer it or if you can afford it, go for it. Because with the 401k plan, you also have to know that however much that the employee decides to put in their retirement benefit, the company has to match them to a certain degree. Now, I believe that the highest that you can go so far I've seen is actually 6%, which is really, really good. Obviously, 6% of your paycheck is really good, especially if your company can match it. But most cases, they usually match either 50%, never 100%.
Right.
Okay, so if you do 4% of your paycheck, they usually do 2%. If you do 6%, they do maybe 3%. It just really depends how much you agree to or what they offer you. Now, obviously, they should have a built plan already. They said that you can put up to 6% of your paycheck into your 401k plan, and we can match you 50%. That's pretty much their guideline to you. You cannot dump a whole paycheck to your 401k plan. That's not realistic. All right, I believe 6% is the maximum as of right now that you can dump into a 401k plan, and your company has to match either 50 or 75%, but never 100. So with that being said, I'm going to go ahead and click next. I don't know why. I think this is what is going on. It's because I keep clicking next instead of finish. That is why it keeps popping up these windows. Now, of course, yes. I'm going to go ahead and click finish so that I can see what I have to offer. Now they say that this is the first thing that you're going to do. You're going to select the benefits to the 401k plan. You're going to change it, obviously, the company to rename it to Match. So the company, I'm going to change this name, all right? And we're going to edit it, and we're going to call this Match 401k. Okay? It's going to be Match. Oops, not on all caps. Match 401k. All right? So this is the company's responsibility to match them. Okay? Yes, it's an active payroll item. And I'm going to go ahead and click next. So this is where I need to set up all the information here. So this is the one where I actually have to type in Merrill Lynch, because they are going to be, the person that I am using to hold on to the 401k plans. So again, I believe it's 991234567 Okay, there you go, 5678. And that is their company number or the account number, whatever it is, okay? And then, of course, now it's going to be setting up how often you want to pay them. In this case, I don't want to set up any promises right now, because I don't know how many employees I'm going to have and how many, if I don't have any employees, then, setting this up, you don't need to make any monthly payments, or you don't have to schedule a payment unless you want to. But in this case, I'm going to say, no, I'm not going to schedule any payments with this vendor. Okay? And I'm going to go ahead and click next. So now it's going to be setting up which accounts you're going to be having it. So in this case, as an expense account, right, we're going to select it. We're going to select payroll expenses, other. Should
you have employee benefits first?
Employee benefits. I'm sorry, say it again.
Set expense account section, then select employee benefits.
Employee benefits. Right here. Employee benefits. Right. Good. And then for liabilities, same thing here, because you're going to be owing those kind of people for that, and that one's going to be payroll liability, other payroll. So liabilities, other payroll liabilities. Okay. All right, and then we can go ahead and click next. All right, then it's going to say, are you going to use standard ones? Yes, always use standard, especially if you don't know too much about the taxing. All right, so then it jumps right next to the next section here, which allows me to how am I going to determine how much, right? In this case, I want to do it as a percentage, or pay. Okay, as a percentage or pay. I think is it for pay or for quarterly?
It says a percentage of pay.
Percentage of pay. Okay, perfect. Okay, and then back to my QuickBooks here, and then it says, okay, so then how much by default rate? What is the amount? In this case, because we're dealing with a company, we're only doing 2%. All right, we only gonna match them 2%. Okay, no more, no less, and it's going to be as an annual limit. The annual limit for here, for the year, is going to be a total of, I believe it is 200 per 200. Wait, sorry, 5,500. That means we can only match them to $5,500. Okay, and we can go ahead and click next. All right. Now we got to edit my employee's standpoint, right? In this case, we're going to rename this and it's going to be 401k deduction. Okay? Instead of saying, oh, hold on. I clicked the wrong one. So it's supposed to be the 401k employee edit. Okay? And we're going to be changing this one to say 401k deduction. All right. Yes, it's an active item. So then I'm going to go ahead and click next. And you're going to fill in everything the same exact way, right? It's going to be for Merrill Lynch. Merrill Lynch. Account number 99-1234567 And then, of course, we're not going to schedule any payments. All right. Next, now this is their standpoint here on how are we going to create their liability count. Same thing goes here. We're going to set the liability as payroll liabilities to other
Other current liability?
No, other payroll liabilities.
I'm sorry.
Yes, it's going to be payroll liabilities, other payroll liabilities. All right? Then we're going to click next. So this is where, okay, yes, you want to do standard tax. So now this is where it comes next and it says what you want to do here. So in this case, I am going to do another based on a percentage of pay. And then for them, I'm going to allow my employees to only do the maximum of 4% of their paycheck. Come on, percentage. 4% of their pay. Okay. Oh, there you go. 4%. All right. And of course, as an annual percentage, they can take the maximum that they can place into the Social Security. It's going to be $16,500. Okay. $16,500. All right. And then we can go ahead and finish. So now we finished setting up our 401k plans. All right. And then we could go ahead and click continue. All right. So then now it's going to ask us to set up any paid time off. So this is something you should definitely consider. Do you offer paid time off? Do you offer personal time off, right? Do you pay them for that? Or for any instances, like some companies, right? You know, you have the 360 days that you can work, right? And obviously, if you don't take those days off, it's required by law because due to the Labor Act that you have to require that your employees must take a break. Okay, so they can take PTO, they can take personal time off, but this is paid time off. So are you going to pay them? So we have in case they get sick, in case they go on vacation. Now, I don't know why the book says that you can pay them for vacation. I think it's better you pay them when they're sick, not pay them for going on a vacation. But in this case, they select that they want to pay them for vacation. So I guess we should follow the book. All right. So here I select paid vacation time. And then I'm going to go ahead and click finish. So now I have two things here. I have hourly vacation and I have salary vacation. They tell me in this book to leave them exactly the way they are. However, they want you to set up the account that it's going to be taken out from, right? We got to set up the account to be for the payroll expense gross wages. Okay, so I'm going to go select one, edit, and again, we're keeping the name the way it is, right? Hourly vacation, okay? Yes, and now we got to set the expense account to expense account gross wages. Okay, and I'm going to go ahead and click finish. And then I'm going to go ahead and edit this one right here. And I'm going to also set this one. We're leaving the name the way it is. And we're setting it up to be also gross wages. Okay. Next. All right. And then now we can go ahead and click continue. Okay. So now the next thing that's going to talk about is going to be anything else that you want to add as a benefit or a deduction. Okay.
Mm-hmm.
So in this case, you can choose to have them or you can choose not to have them. I do want to talk about some of these just so then you are aware of what some of them are. We have cash advance, okay? Now, typically, companies shouldn't offer this because you never want to have that idea where your employees need the money that badly that you're giving them a cash advance. So I'm not gonna offer that. Any taxable fringes. So again, fringe benefits is pretty. It's something that the company offers. So for example, right, you because they are sponsored or they're partnered up with certain other companies, they can offer you fringe benefits such as for this example here, right? Since we're a photography type of business, we can be we can get tickets to the Met Gala or something, right? And we can and by us as being a photography kind of things, right, we can go there to be a paparazzi, etc., right? The Met Gala or whatever, take pictures of the venue, whatever it is, right? It's a job that you can do, but we can offer tickets to the employees, right? But obviously, it's you can have the choice whether you can charge for the tickets or just give a discount off the tickets, or you can actually go in for free. So that's considered a fringe benefit, right? Because you do actually have to pay a portion of your money to the company because, of course, they have those connections, right? And for most cases that companies do offer those fringe benefits, right? It's usually discounts on major things, such as maybe they're partnered up with AT&T or Cox even. So they can give you special deals where they can give you discount deals because you're working for the company. So that's considered a fringe benefit, and you do have to pay a portion of your money. It's like membership dues, right?
Mm-hmm.
Okay. Other than that, mileage reimbursements. Yes, this is what we talked about in chapter 9. When if they offer this to you, right? What it does is it's going to go towards your paycheck. Obviously, you have to pay it forth, but it's going to be reimbursed through your paycheck. Okay, and then of course miscellaneous, anything that's additional, so such as meals. If you have a cafeteria in your workplace, you can offer that to be a compensation or basically a deduction to your paycheck. Is that we can offer meals. We can pay 50% of your meal, and you pay the other 50%. So that's going to be considered a deduction to your paycheck because, of course, the companies may be big enough to pay for your meals, but again, they're not responsible to pay for your meals. It comes out of your paycheck as well. Other things that you could have deductions to, again, is going to be any wage garnishes. I'm not quite sure what that is, but any union fees, those are going to be something that's deductible from your paycheck because you have to pay union duties, right? You have to pay a certain amount to a union every month or every paycheck. And so on and so forth. So again, I'm not going to offer any extra deductions or any things. So I'm going to go ahead and click finish and just continue. No extra benefits. So I click continue. And that concludes the entire first section of the company setup. All right. That was only part 1. We still got to do part 2, 3, and 4. All right. Any questions so far?
No.
All right. So this is what I'm going to do. We're going to try to go through section 2, which is setting the employees. Now, my gosh, I did not expect this to happen, but setting up employees is also a long process. Your tax actually goes through pretty quickly, and year to date, we're skipping. We don't need to do that. But let's go ahead and just see how far we can get through setting up our employees. Okay, so
Okay.
go ahead and click that continue button, and it's gonna say, here's your first duty is to set up your employees. So here you are. So, but when you're setting up your employee, this is just setting up your first employee. If you choose not to set up your employee right away, you can go ahead and click cancel and just proceed and just enter in your information just like you enter in a vendor and a customer, right? You go to the employee center, new employee. But in this case, the book wants us to go ahead and set up our first employee so you know what you're expected to be asked. Okay? So first things first is, what is the person's name? Pretty straightforward. In this case, we are placing in Katie Reynolds, Kati Reynolds. Her last name's Reynolds, no middle name. Unless you do have an employee or two employees with the same exact name, the middle initial is very crucial to separate them. So Reynolds, okay? And then other things that now we have to look at is when we look at placing the name on the actual paycheck. Okay, Katie Reynolds could be using she could be using what do you call it?
An alias?
Not an alias, a nickname. There you go, nickname.
Okay.
Katie could be short for Caitlin, right? Her full name could be Katilyn. We need to make sure, because she has to fill out a W-4 form, she has to put her legitimate legal name. Because again, when you go to the bank, they're not going to take your legal name. I mean, they're not going to take your nickname. They're going to take your legal name. So, so making sure that you double check this as well, that before you go on and proceed to the next part, right? Ensure that the name that's going to be on the paycheck is going to be the legitimate legal name that they are filing with you. Okay, so if Katie's their nickname, you could put Katie here because you know that's how you refer her to is. But if her full name is Caitlin, then you put Caitlin in here. In this case, Katie Reynolds is actually her full name. Okay, she's currently working with us. So you can have records where you can have a person who doesn't work for you anymore. Now that's only for tax purposes only, just because again, let's say I had somebody work for me for 6 months, but I terminated them at the end of 6 months because they just were a lousy worker, whatever it is, for my reasons, right? If that was the case and you are using QuickBooks, you definitely need to put them in here, especially when you're filing taxes, because you still have to fill out their W-2 form for that. Okay, so.
Okay.
In this case, Katie Reynolds is 100% active. Okay. All right. So the next thing here is contact information. What is her home address? It's going to be 432 Enos, Eno S Lane. All right. I believe she lives in Danville.
Yes.
And she in the state of California. Now this is very crucial because by placing this piece of information, it's going to automatically pull up all the state taxes that she is required to pay. So by placing in California, and I go ahead and put the zip code, I think it's 94501.
Right.
And then we're going to go ahead and click next. So again, because we established that she is currently residing in the state of California, QuickBooks is going to be smart and pull the information that she has to pay for the California state tax automatically. You don't need to notify her that she is a California resident or needs to pay the California state tax. It's going to be automatically registered right as soon as you place in your the person's address. Okay, so let's say this person is she's an out-of-state worker. you're still going to put her resident place. So if I put the state of Nevada, Nevada doesn't pay state taxes. So that means on her paycheck, she's going to only pay for the federal state tax. I'm sorry, for the federal tax, not the state of California. Okay?
Okay.
So those are a few rules that you need to know as well. If you're working at a state, you only pay tax to the state that you reside in. All right. So if I live in Nevada and I'm working at this company and their company is in California, because I'm officially a Nevadan, I'm going to be taxed at the Nevada state level.
You know that's changing in some parts of the country, right?
Yes, I believe so. Yes,
Okay.
but it is right now currently still a rule.
Okay.
But yes, I do know that because you can live in multiple states and have multiple state licenses. Yes, you can because of that rule. So yes, you can have that where it can come into conflict where if you own too many homes in too many different places and you know, whatever it is, right? And you have both licenses in both locations, then yes, you're going to have to pay taxes. You may have to pay double state tax.
We're going to start basing that. Some of that is going on back east already, where you were, if you were corporate headquarters is in New York,
Mm-hmm.
and you live in Connecticut,
Mm-hmm.
you will be paying New York tax and you'll be paying Connecticut tax.
Absolutely, yes. There's also that rule too. So, all right.
All right.
Yes. Tangents aside, all right. That's just a little FYI. Yeah. So that's yeah. Anyways. So the next section is going to ask you a few questions that is going to be on the actual W-4 form as well, okay? So such as, well, first off, what kind of employee are you? You are a regular employee, right? So usually when you learn for payroll, you have a few different types of employees that you can take a look at. Most commonly, and if not all, your statutory and your non-statutory employees are going to be on your payroll list. Anybody that's an independent contractor, a leased worker, or somebody, I can't remember what they are, but anybody that's a leased employee, an independent contractor, all of those kind of people, they're not going to ever be on your payroll list because you don't ever have to pay anything for them. It's only your employees that you only pay for anything else. So, of course, she's a regular worker. She's not an officer. She's not anything else. All right, her social security number, I believe, is 1, 2, oh, is it 333? 333 22 1 2, oh, 432. 4 3 2 1. Okay. And of course, her hire date. This is, you can choose if this is relevant or not. You don't really need to as far as this, just because, you know, the day that you hire them, you know, it's only going to go towards your taxes, so they know how long you've had an employee. But it's not really. It's starred because it's saying it's supposed to be required. But again, you can put any date here. It doesn't have to be specific. But in this case, it is going to be as of April 1st, 2008. Okay. And then, of course, release date. Of course, obviously, she's still working, so she doesn't have one. Okay. And then next one's going to be birth date. Now, of course, this isn't so we can know when her birthday is. This is just to make sure that we can confirm that she's legal of age to be working. Okay, because again, if you have someone in here who's was under 17 years old, unfortunately, there are guidelines and rules on how long they can work. They can only be working at a part-time level.
Right.
And you can only compensate them for so much. Okay? But of course, and then for say here, gender, you have to reveal this. For those who are uncomfortable revealing what their gender is, so for for people who don't feel comfortable for that, you could just leave this section blank. They allow you to do that. But for most cases, it is a what do you call it? A statistic.
Right. Demographic. Yeah. Keep
Absolutely,
track of it.
yes. It's definitely used for demographics, statistics for, yeah, for your company, saying how many males are working in your company versus females, right? That's a statistic. All right, so that's all that piece of information is. But I'm gonna go ahead and say she's a female. All right. And now here is the next set of questions is going to be tell us how you plan to pay Katie. Well, here of course if you're familiar with how payroll periods work, you do have the option. You can pay them on the daily, right? So for most cases like Uber, Lyft, Postmates, right? You can claim your earnings at the end of the day. Okay, so that's what's cool. But, not all companies can afford to do this. Okay. You could do it weekly. So every week you get a paycheck. So that's 52 paychecks per year. You could do bi-weekly. So 26 paychecks per year. Because, we always have that two the months you get 3 paychecks. All right. Or you could do semi monthly, which is twice a month, meaning you get a total of 24 paychecks. So you get paid on the 15th and then either 30 or 31st of the month.
Right. Right.
Or you could choose a monthly payment. Now, monthly payments usually are for like federal agencies, such as the VA. They pay monthly, or even governments that pay certain businesses or even certain individuals. So anybody that's reaping Social Security or anything like that, they get paid every month. Not every week, not every 2 weeks. They get paid every month. So that's something that you can consider. I barely do not ever see something being paid every quarterly. That's kind of, unless obviously you don't pay yourself as the owner of the business, but I mean, I have not seen someone who gets paid every quarterly unless they work for the federal government. But again, of course, most likely you're on some kind of either weekly, bi-weekly, or semi-monthly paycheck. I've never seen someone that gets paid that, or even once a year. Never ever seen someone get paid once a year. Okay. So in this case, so you have those choices, and she is actually going to be paid twice a month. So her paychecks are the 16th and the 31st. Okay? And of course, she's a salary paid person. So most salary paid people are going to most commonly be twice a month. Okay? Usually your hourly are either weekly or bi-weekly. Okay? And of course, we're going to also see how much is the salary amount. Now, she's making good money. She's making $60,000 a year. That's actually pretty good. All right. Anything else below that? That is it for this section here. Okay. All right. And we can go ahead and click next. So now we're going to be looking at how much benefits she's going to be taking out of her paycheck. So in this case, we're going to be setting up each and every single one. We are going to be using a 401k. We are going to use the 401k, and we're also going to, the match 401k. And then, of course, we also have the medical insurance. All right. So in this case, for what's going to be taken away from the paycheck, in this case, the first one's actually going to be taken away from our end, is $50. Oh, never mind. It's already, oh no, here you go. It's supposed to be this one. $50. Okay. And her maximum is $5,500. I don't know if I can pull this over. And yeah. So her maximum is $5,500, and it's not showing $5,500. There you go. Okay, so the maximum, so first off, deductions is hers. She's only going to be able to put in a $50, and the maximum she can do is $16,500. The maximum that we're going to be doing is we're going to match her 100%. In this case, I don't know why we're matching her 100%. It's only supposed to be half of it. Okay, so this is a flaw in the book. They put that we're gonna, if she puts $50, we're gonna match her $50. It's supposed to be half of what she puts in, but I don't know. The book is wrong right there.
Yeah,
And
all
then
mine shows zeros.
it
So
does.
yeah, it's got zero in the amounts, but the limits it has the 16 and the 55, 16, 5 and 55.
Huh. Why is it that I have that we are gonna see she's gonna put $50 and then $50?
Maybe that's coming on the next page or something. I'm taking a look right now. I don't see anything. That's on 305.
You said 305.
305.
304, 305. Yeah, right. Oh, it says 0. Okay. Okay, I see it. Okay. Sorry,
The only thing I think
my
we're doing
book is
is
so blurry. So she's saying, okay, so hers is $0, and right here it's $0. It's only the Medicare that she's going to be placing it, or things that we're going to be taking out of her paycheck, is $100, and there's no limit to how much health insurance she can claim. So $100 here. Okay, so 0, 100. All right, and I'm going to go ahead and click next. So now we're going to be setting up how she is going to be calculating how much vacation pay that she's allowed to earn. So in this case, Katie's pay period earns. How much does she earn? She can earn up to 80 hours. Okay, per year. This is vacation pay. All right, and then okay, so then it says right here unused vacation hours, and we're gonna say it's going to start new every year. So reset each year. Okay. And then we're going to keep vacation accrual year starts on January, because our fiscal year is January. Our fiscal year is January. So this is time off currently. She obviously doesn't have anything there. But right here, so we're going to be entering how much she has here. So in this case, so far as of 2-24, she's claimed 3.
I can't tell you because yours is different than mine.
Is it?
Yeah.
Okay. Let me see.
It says have an accrual limit, and the maximum hours is 200. Time off currently. And that's it.
Time off currently. Yeah, I know. I don't have. Okay, so the max is, yes. So mine is different than the book. So in this case, I'm gonna go ahead and just say that right now, as of today's date, she has available. I'm gonna say 200. So in this case, she hasn't used any, and I'm gonna say, so that means how many that she has used. She's used none. So therefore, the maximum that she can earn is 200. The maximum hours that she can earn for vacation pay is 200. But in this case, you're right. It is different from the book, because yes, it shows here that I don't have the maximum amount of hours that she can claim. I only have what she can earn, and so on and so forth. Okay, so PTO, 80 hours per year. Limit is 200, which I don't have. Okay, so my window is slightly different than your window. And I see right here, yes, and you do get the pay time off, but earned is 80, maximum is 200. So mine has that little bottom section that says how much currently she has. So here, this is where your maximum would be, because if she can claim up as of right now, right? How many hours does she have available? She has 200 hours. How many has she claimed so far? None. So I guess you can, if you look at this carefully. It's kind of like a max and min right here, or max and then what she has left. Okay, so I'm going to go ahead and click continue. All right, so now it's going to ask me to enter in the rest of this information, saying how I'm going to set up Katie Reynolds direct deposit. Am I going to deposit right now? I'm going to pay her as a physical check. I'm not going to set up a direct deposit, because if you do this, you're going to have the bank information so you can wire the money directly to her bank account. And little did you know, you have to pay for the service. You can't just go tell your bank, hey, I want to make a direct deposit to this person's account. No, you actually have to pay a service fee for that, for the bank to be able to recognize that, so they can automatically pay the person every 16th and 30th of the month. So in this case, it does cost you money to go ahead and do direct deposit. Okay? So pay Katie payroll based on direct deposit. In this case, I'm going to keep it as unchecked as no. So that means every month that I do give her a check, it's going to be a physical check. Okay?
Okay.
All right. So let me go ahead and...
That really skipped something.
Did you? No, that should be... This is the right one.
No, I don't even have that in my book.
Oh, yes. Yeah. Oh, yeah. Yes. In your book, you don't have this. You don't have this. No, you don't have this.
I got concerned there.
No. It's because it's newer now. It's a newer option that they placed in here, where it allows you to give you the option. Do you want to do direct deposit? Because nowadays, it's harder to go get your paycheck nowadays, right? Because of the whole disaster. So this happened as of 2019. It just makes it so much easier to do EFTs versus having to pay a payroll service to print the checks out for you. Save some extra money. And then, if then for some employees, right, they can't get their paycheck, so they have to ship them out, or they have to mail them out.
Right.
That costs money too. So at the end of the day, the cost is going to be evened out whether you pay for the direct deposit or whether you give them a check. So yeah, this part isn't in your book, but it's definitely something you want to consider as part of this part.
Yeah. It jumped from there to taxes, and I'm like, wait a minute, I'm missing something here.
Yeah. So now we're going to be moving on to filing the federal and state withholding. So the first one is we're going to be claiming. So as I mentioned before, because we selected that she resides in California, QuickBooks already has recognized that these are the things that she's going to be subject to be paid for. She's got to pay into the California state tax, okay? And she is subject to California unemployment. So yes, California does have unemployment. Okay, so that is required. Now, of course, again, it's not going to come out of her paycheck. It's actually going to come out of our paycheck. I mean, the company's bills. However, I believe in California, you do pay, I think, a small portion of it. No, I know that there's a different one. There's the disability insurance that you have to pay towards, and you have to pay for state. There's two that you need to pay. But unemployment isn't one of them, because unemployment is going to be the company's responsibility to pay. So right here, it's just telling you, well, if you were to do it, where is it going to be placed from? And they're both from California. And the question is, has she been working for you in 2021? Did she ever live in another state? Of course, we're going to say no. Okay, because if she is an out-of-state person, then you're going to let's see what happens when you do out-of-state. If you do out-of-state, then you have to select what state it belongs to. So in this case, no. And I'm going to click next. So now this is where the W-4 form is going to come into play, because now we need to check off all things that are matching on the W-4 form and placing it into QuickBooks. So how is she filing? She's actually going to file as married. Yes. So that means, of course, there are two different methods that you can do. So remember, if we looked at our W-4 form nowadays, now the 221, right? It allows you to choose, right? You can take one withholding if you decide to file jointly. In this case, you either file single or file married but separately, or you filed married jointly. In this case, we're just going to do filed as married. This because we're on the old W-4 form, right? You could take a tax credit if you're filing jointly. In this case, she's not going to claim it, so her allowances is that she has 2 allowances, right? 2. So she possibly has 2 kids. We don't know. Any extra withholdings? 0. Okay. She may not be the head of the household, or she may not be the person who owns the house herself, or she doesn't want to take any additional deductions. So then again, the next question is this person an alien? So that's also important why you need to have a social security number. But most importantly, you also need to have some form of identity that you are a legal U.S. citizen. So the best way to do that is either have a birth certificate or some kind of naturalization documentation. Okay, but I've heard lately that some places don't require birth certificates anymore. They just require only their social security. Again, anybody can get a social security. That doesn't define if you're a U.S. citizen or not. Okay, because I know that a lot of people who get working visas, they get a temporary social security number. So make sure that you know that if you do plan on becoming an owner of a company, that should be the first 3 things that you will require. The license or the identification ID, social security, and some form of naturalization to prove that they are a U.S. citizen. Okay? Of course, she is a U.S. citizen, so I'm going to say that does not apply. And of course, if she does have a work visa, they're not going to have a credit card. They're not going to have a temporary social security number. So you don't need. So that can be, not applicable. Then we're going to take a look at what is she subject due to be taxed for. So it's automatically selected for me. By law, she's required to be paying federal income tax withholdings. And also, she has to pay into Medicare and Social Security, right? We talked about the FICA, Federal Insurance Contribution Act. So I'm going to go ahead and click next. So now, here's the next question that says, enter in the state tax information. So again, she's filing as married. All right. For the state that she belongs in, regular withholdings, allowances, she has 2, 0 extra. Okay. Estimated deductions, she has 0. Extra withholdings is 0. So this is for the state. Okay. Okay, so that's what it was. In the state of California, you have to pay state income tax withholdings and the disability something insurance. For us, we only pay federal. Okay, so I go ahead and click next. So once I've done that, now it's going to say subject to California employment, yes. And also here, there you go, the California disability. Okay. And then the next question is this employee subject to any special taxes? So from the previous class, if you live in such a particular area, you may be subject to local taxes. So for example, San Francisco, right? They actually implement a special local tax that is required that employees pay because they have that, the trolley service, you know what I'm talking about? They have that runs through the whole entire city. And that's going to be considered a local tax that all employees are subject to pay because they need to maintain it. They need to make sure it works. So unfortunately, that's going to be something that you can be subject to be taxed for. But in case they live in this shop is in San Jose, nowhere near San Francisco, so no extra local taxes. Okay, so I'm going to go ahead and click next. We're almost done here, and it is exactly 3:10. So here now we are looking at setting up wages plans for Katie. Okay, so here, wage plan. What is she? She's going to be considered an S plan. Now, I'm not quite sure or familiar what these are. Okay, so you definitely want to make sure that you look into it, what a state UI plan is, or what a state plan for both UI and DI. Okay, so that makes sense because she is paying for the unemployment and for the disability insurance. So in this case, she is an S1. Consult a professional at this to understand what these, typical codes are for. Usually, just depends on what they, I don't know what they are, but definitely, like I said, seek a professional, payroll person to see what these tax codes mean. Okay? And then we can go ahead and we are finally done with setting up Katie. All right?
Yep.
That took, yes. Okay, as you can see, she's there. And we can go ahead and click continue. So when we continue back from our break, we will continue and start entering in all the federal tax information that the company is required to pay for having employees. All right, we got to set all of that up. So right now it is exactly 3:10 or 3:11. So I'll go ahead and give you 15 minutes. Oop. So make sure that you come back. Let me see. 3:10 plus 15 is 25, 26. Okay. I'll give you one more extra minute. So please be back no later than 3:27.
Okay.
Okay. See you then.